Economy Update, June 2024. Welcome to India Business Insights. In this video, we will be discussing the key indicators and trends that have shaped the economy in the recent weeks and months, from the manufacturing sector's improvement to the recent spurt in new project announcements. We will cover it all. So let's dive in and see how Indian economy performed in June 2024. GDP. On June 7, the provisional estimates released by the National Statistical Office (NSO) indicate that India's real gross domestic product (GDP) growth for the fiscal year 2023-24 has been revised upwards to 8.2%. This growth is driven by the resilience of domestic economic activity, particularly in the manufacturing sector, which has seen a significant surge of 9.9% in 2023-24 compared to a decline of 2.2% in the previous year. Manufacturing sector. The manufacturing sector has emerged as a key driver of this growth, witnessing a surge of 9.9% in 2023-24, a stark contrast to minus 2.2% growth registered in the previous year. Sector-wise analysis. Real gross value added (GVA) experienced a growth rate of 7.2% in 2023-24 compared to the 6.7% growth observed in 2022-23. Agriculture, mining and quarrying sectors also showed growth, albeit at a slower pace. Quarterly estimates. Real GDP and GVA demonstrated strong growth in the fourth quarter, January to March of 2023-24, with rates of 7.8% and 6.3% respectively. GDP growth projections. The Reserve Bank of India expects India's real GDP to grow by 7% in 2024-25, with a growth rate of 7.2% in the June 2024 quarter and moderation to 6.8% in the September 2024 quarter. Capital flows and private investment. India is expected to see improved capital flows, boosting private investment and a rebound in exports. CPI. The Consumer Price Index (CPI) for India in June 2024 is expected to be around 4.75% as per the provisional date released by the National Statistical Office (NSO) on 12 June. This is a slight decrease from the previous month's figure of 4.83%. The CPI measures the average change in prices of a basket of goods and services consumed by households. Corresponding inflation rate for rural and urban is 5.28% and 4.15% respectively. In May 2024, following is the trend as updated in June press release of PIB. Food and beverages. This includes the cost of groceries, beverages and food items such as meat, dairy products, fruit, vegetables and grains. The weight of this component is 54.18% in the CPI basket. Pan, tobacco and intoxicants. The weight of this component is 3.26% in the CPI basket. Clothing and footwear. This includes the cost of clothing and footwear such as shirts, trousers and shoes. Its weightage is 7.36% in the CPI basket. Housing. Components of this is the cost of housing including rent, mortgage interest, property taxes and maintenance expenses. The weight of this component is 21.67% in the CPI basket. Fuel and light. It is 7.94% in the CPI basket. The Reserve Bank of India (RBI) in its latest monetary policy review had expressed concerns about the uptick in inflationary pressures and the need to maintain a vigilant stance to ensure price stability. The central bank is closely monitoring the inflation dynamics and may consider further policy actions if the upward trend in CPI continues. The inflation figures directly impact the interest rates. Generally, low interest rates stimulate growth, while higher interests may dampen the growth expectations. Overall, the June 2024 CPI data suggests that Indian economy is facing moderate inflationary pressures, which will be a key factor for policymakers in their efforts to strike a balance between growth and price stability. Foreign exchange reserves. As of June 2024, India's foreign exchange reserves stood at a record high of $655.817 billion. In May 2024, India's foreign exchange reserves reached a historic high of $651.5 billion. Therefore, the foreign exchange reserves increased by $4.317 billion from May 2024 to June 2024, reaching a new all-time high. The composition of India's foreign exchange reserves in June 2024 compared to the previous month is as follows. Foreign currency assets increased by $2.4 billion to $47,56,930 crore. Gold reserves remained unchanged at $4,54,381 crore. Special drawing rights SDR remained unchanged at $1,51,325 crore. Reserve position in IMF remained unchanged at $38,939 crore. The total foreign exchange reserves in June 2024 stood at $648.562 billion, a $2.9 billion increase from the previous month. The rise was mainly driven by a $2.4 billion growth in foreign currency assets. The RBI's focus seems to have been on maintaining exchange rate stability and supporting economic growth, as indicated by the unchanged monetary policy stance in June 2024. Export-import. Exports. Total exports. India's total exports in 2023-24 reached a record high of $776.68 billion, surpassing the previous record of $776.40 billion. Merchandise exports. Merchandise exports in FY24 were $437.06 billion, a decrease of 3.11% from the previous year's $451.07 billion. Service exports. Service exports in FY 2024 were $339.62 billion, a 4.4% increase from the previous year's $325.33 billion. Key sectors. Key sectors driving merchandise exports in FY 2024 were electronic goods, drugs, pharmaceuticals, engineering goods, iron ore, cotton yarn, and handloom products. Imports. Total imports. India's total merchant imports in FY 2024 were $854.8 billion, a decrease from the previous year's $898.01 billion. Merchandise imports. Merchandise imports in FY 2024 were $677.24 billion, down very sharply from the previous year's $751.97 billion. Services imports. Services imports in FY 2024 were $177.76 billion, a contradiction of 2.46% from the previous year's $182.05 billion. Trade balance. Trade deficit. India's trade deficit in June 2024 was $78.12 billion, a significant improvement from the previous year's $121.62 billion. The government has taken several initiatives to boost exports, including the introduction of the Production-Linked Incentive (PLI) scheme for toys and the extension of the ban on wheat exports. India is actively exploring new markets for its commodities and value-added products. India is negotiating several trade agreements, including the India-UK Free Trade Agreement (FTA) and the Comprehensive Economic Partnership Agreement (CEPA) with the European Union. Despite global economic headwinds, India's exports are expected to continue growing, driven by the government's initiatives and the resilience of the export sectors. The sector continues to face challenges such as geopolitical tensions, tight monetary policies, and expectations of further tightening in many export destinations and falling commodities prices, which could impact exports growth in the coming months. IIP. IIP growth rate. The IIP growth rate for June 2024 is 5.4%, indicating a moderate growth in the industrial sector. Sectoral performance. Mining. 8% growth rate. Manufacturing, 5% growth rate. Electricity, 7.5% growth rate. The growth rates for primary goods, capital goods, and infrastructure construction goods are higher than the overall IIP growth rate. The 8 core industries have shown moderate growth, with electricity and steel being the top performers. The IIP growth rates for March and February 2024 were higher than the growth rates for June 2024. Use-based classification. Primary goods. This category grew at a rate of 2.5%, suggesting that the supply of primary goods may not have kept pace with the overall demand. Capital goods. The capital goods sector registered a growth rate of 6.1%, indicating increasing investments and capital formation. Intermediate goods. The intermediate goods sector grew at a rate of 5.1%, reflecting sufficient supply to meet the production needs of various industries. Infrastructure construction goods. This category grew at a robust rate of 6.9%, highlighting ongoing infrastructure development and construction activities. Consumer durables. The consumer durable sector experienced a strong growth rate of 9.8%, indicating increased consumer demand and purchasing power. Consumer non-durables. The consumer non-durable goods sector grew at a rate of 4.9%, suggesting relatively stable demand for essential non-durable items. We notice that robust demand is emerging in some sectors. This is likely to gather momentum, with strong growth, likelihood of a good monsoon. Further, the government is likely to present a budget which may stimulate demand. June MCP. The RBI's MCP met from June 5 to 7, 2024 and decided to keep the key repo rate unchanged at 6.50%. The decision was taken by a 4-2 majority vote. Consequently, the Standing Deposit Facility SDF rate remains at 6.25% and the Marginal Standing Facility MSF rate and the bank rate at 6.75%. The MCP also decided by a 4-2 majority to remain focused on the withdrawal of accommodation to ensure that inflation progressively aligns to the target while supporting growth. The RBI maintained its stance of withdrawal of accommodation to bring down inflation to the target level of 4%. Inflation remains a concern, with food inflation still high despite an overall decline in headline CPI inflation. The central bank expects some correction in headline inflation in Q2 of 2024-25 due to favorable base effects, but warned of uncertainties around the food price outlook. The RBI highlighted the need to achieve a durable alignment of inflation with the 4% target while supporting growth. The central bank also announced measures to enhance India's global footprint as it approaches its centenary year in 2027. Economists largely expected the RBI to maintain the status quo on rates given the growth inflation dynamics. They believe the RBI will likely cut rates only in Q4 of FY 2025, with a change in policy stance expected by December 2024. Government schemes. Pradhan Mantri Vishwakarma Yojana. This scheme was launched on June 17, 2024 to support and empower artisans, craft people, and traditional skilled workers who work with their hands and tools. The scheme aims to provide financial assistance and skill development training to these workers, as well as provision of modern tools, equipments, and technology to improve their productivity and quality. Additionally, the scheme will provide marketing support and access to new markets, both domestic and international, to help these workers increase their income and improve their livelihood. Rooftop Solar Scheme, Pradhan Mantri Suryodaya Yojana. This scheme aims to provide 300 units of free electricity per month to 1 CR households through rooftop solarization. The scheme will provide subsidies and financial assistance to households for the installation of rooftop solar panels as well as net metering facilities to allow excess solar power generation to be fed back into the grid. The scheme will also include capacity building and awareness campaigns to promote the adoption of rooftop solar and reduce the country's reliance on fossil fuels. While most of you may be aware that India had its general elections, the ruling NDA had formed the government again with a low majority. The principal party, BJP, has remained the largest party with a significant reduced seat count in the Lok Sabha. The government will be presenting its budget at the end of June. We will produce a special update on the budget very soon. The government is far ahead on the fiscal consolidation target so far. Further, the government has received a windfall amounting to 0.3% of GDP in form of an enhanced dividend from the RBI. This allows the government to accelerate spending and allow tax cuts with an objective of stimulating demand. That's all for today. Stay tuned to our channel for more updates on the latest developments in the Indian economy. Don't forget to subscribe to get the fresh insights delivered right to your fingertips. Please also check back in a few days for the budget update.